Okay, first week in November, it's time to talk about buy in November. Okay, so many of you have heard of the buy in November, sell in May. The strategy for November, very simple. You enter the market in November and you leave it in May, and you trade that 6-month pattern. The historical data on this, and I'm just taking the S&P data, averages an annual return of around 6 to 7% during that 6-month time frame, compared to a 2 to 3% move from May to October, right? Now, the May to October is not really a bearish pattern. It's really kind of a coin toss. We do see that typically May through October becomes higher in volatility. Now, you have to take out election years, but when you put all of this together, election years included, this is the kind of historical data that we see when it comes to buying in November. It's a great long-term strategy. However, I got to say this, past performance doesn't guarantee future results. Now, with buying November and sell in May, what the strategy involves is indices, not individual stocks. If it's individual stocks you're looking for, well, I want to talk about those right now. We're talking about the money calendar, and we're going to talk about November 2024, looking for a set of repeatable seasonal stocks. So, what is a repeatable pattern? Once again, it's something we find that works more often than not, time and time again. There are price patterns that are repeatable. I like time patterns. I like time patterns because it's something that happens on an annual basis. All right. And yes, we do use historical data, but because it's time-based, we're able to see it ahead of time, not like a trend breakout or a support or resistance indicator. Price-based indicators, you can't see them ahead of time. You can only see them when they happen. Time-based indicators, you're allowed to see, you can actually see them ahead of time. And you can see right here, this is the calendar that I start with. This is actually November of this year. You can see every bit of it is green. All right, now what I did here is I looked at 20 to 40 days in the future. All right, so I'm not looking at 2-day patterns. I'm not looking at 200-day patterns. I'm looking at patterns that average about a month out. And I'm talking about 30 trading days, 20 to 40 trading days out. And I'm finding for November, it is mainly bullish. Now, when I look at the calendar, I'm looking, if it's green days, it's bullish on the stocks I'm looking at. If it's red days, it's bearish. If it's in between, then it will color something that is somewhere orange or yellow. All right. Clicking on a day will give me the opportunities inside that day. And what I'll have is I'll have a list of stocks. I'll look at things like how long is each pattern typically last. I also look at the end date of that pattern. That helps me with options expiration. I'll look at the accuracy, 90%, but sometimes higher. I'll look at average trade profit, and I like to sort by that sometimes to see where the big money's coming in. And then finally, I look at something called a power meter, which gives me an idea of what stocks are having better trends now than they were at the beginning of their 10 or 20-year pattern. Okay? So here is a stock that is 100 over 100 the last 10 years. And that stock is Fair Isaac Corporation, FICO. And so Fair Isaac has had a stellar last 10 years. And you can see here starting in 2014, that pattern, which is buying it now and holding it for 59 days. All right, 59 trade days. That's going to put us into January. That puts us well into January, 25% return on the stock. 2015 was only 1.83. 2016, 6.30. And you see what happens. Over time, this has actually gotten better. Last year was 50%. Stock went up 50%. Yeah. So between November 6th and then toward the end of January, this stock went from the 900s up to, and I don't see the end of it here, but it was near 14. It was above 1,300 a share. Unbelievable. Unbelievable run that this thing had. All right. Will it do it again? The average move is above 20%. We could take 20% as a conservative number based on everything we're seeing here and work with that number. So what do? First thing, let's take a look at the stock price coming into today. So we're talking about a stock that's trading just south of $2,000 a share. That's right. This stock is also a high expensive price stock, but The price projection based on that 20% is about 2,400. So there looks to be a 400-point move to the upside. That time is mid. That time frame is mid from now to about mid to end of January. So, question we have on our minds is if we like this pattern, if there's liquidity here, if we feel comfortable with it, and that's what all of us have to do as rules-based traders. We have to feel comfortable with the system we're trading. Is it a buy? And if it is, do I want to buy the stock? Do I want to buy the options? Buying the stock is going to cost me about, let's call it $2,000. Right, so $2,000 a share, 100 shares is going to cost you $200,000. So obviously, maybe we might want to try something a little cheaper. Let's look at the options. Coming into this morning, the options, the 2,000 calls, which are the at-the-money calls, we're trading around 152. Right, so we're talking about $15,200 plus to buy the calls. They're not cheap either. So if you like a stock for a duration, let's call it between now and 59 days from now, if you like this stock or any stock for that matter, then the stock might be expensive, but the call options might be expensive too. It might make sense to spread your risk, and spreading your risk is buying a lower strike, selling a higher strike, and really bringing that down to a risk level, a cost and risk level that you feel comfortable with. All right. My November takeaways look like this. That buy in November, sell in May, that's a 6-month pattern. And it's on indices. We actually looked at the S&P 500 results to come up with the information at the beginning of this section. And the money calendar, we looked at the difference between buy in November and sell in May, which is market indice, and the money calendar, which is stocks, opportunities on stocks. And what we know is that by looking at individual seasonal stocks on a calendar, opportunities are abundant, as we have seen today.